Welcome, everybody. I'm Tom Sosnoff, and this is we're back doing Rising Stars. And today we have Bobby Gaines from Alabama in the house. And Bobby, excited to have you here, and really looking forward to hearing your story. Bobby, how are you?
I'm doing great, Tom. It is an honor to be where you and Tony Batista have been. Matter of fact, Tony has a group that supports him, and he's not here today, but Pista. Mm-hmm. So I formed a group, Tom, that supports you. You'll be happy to know. So
okay.
If you can kind of keep up with the acronym as I bring it out.
Okay.
People in support of Sosnoff every day. PISSED. So there's your group, Tom. We'll counter all the Pista folks out there.
Love it. Love it. Not sure it's got legs, but I love it. So as you can tell from Bobby's accent, and
I'm from New York.
Yeah, Brooklyn, just right around the corner from Tony. You born in Georgia, live now in Alabama.
Live in Georgia.
On the border of Alabama.
On the border of Alabama.
Yeah.
2 miles, and that's born in Georgia, but I have the Alabama accent. So I'm 2 miles from Alabama. Always stayed at home, never moved off. Mama lives down the street, and I've always been a mama's boy and staying close to mama.
It's a great story. And you are a professor at the University of Alabama.
Teach courses at Alabama, investment class, risk management class. And I think the thrill of our class last semester was having you, Tom, speak to the class. And you told me, Bobby, these kids sent me a million emails afterwards thanking you. How many emails did you get, Tom?
It blew me away. I mean, I swear, I think it was every kid. I don't know.
It was every kid because I gave them 20 extra points to thank you for speaking.
Oh, is that how you got?
Yeah, that's how I got. So 20 extra points they got for that.
Yeah, I can't get my kids to write thank you notes, and you're getting your kids to write thank yous to me for doing that. But they were, every person was super sweet, and I was like, I wasn't really sure if I knew that, or I wasn't sure when I was talking to them if they had any idea what I was talking about. I mean, I knew they were all smart and everything, but sometimes we get into these kind of high-level discussions about trading and markets, and you're like, there's sometimes a disconnect between certain parts of academia and what happens in real life and trading. And listen, it was special for me. I love the interaction with college kids.
Well, and what you did is you talked to them about building a business and taking risk, which is important because we think about our kids that are in college nowadays. These people have always grown up wearing a seatbelt. They've always had training wheels on the bicycle. They have to wear a helmet on the bicycle. So we have sheltered them from the risk of life. And so they come to college and they're blown away that And they're not willing to take risk and the risk necessary to be successful. So when you come in there, Tom, and you talk about, hey, I built these successful businesses, I took risk, it really resonated with them because these kids have not taken risk in their life.
I don't think enough people, and I don't want to get too far off topic, but I don't think enough people talk to university students and grad students and even high school students and talk about the benefits of taking risk. We're always like, hey, take a step back and think about it. Nobody ever says, hey, you know what? Don't think about it. Learn to make that decision instantaneously. And I think that outside of especially at Alabama, you can appreciate this, but outside of a football coach trying to get you to process things like super quick, because that's really the differentiator between an average player and a great player is their ability to make decisions. We don't talk about that a lot, and we don't train young students and graduates for that kind of to apply that in real life in any business situation. We look for people here to join our firm that can make super fast decisions. I don't care if they're always right. I just want to make a decision. Take a stand.
And another thing that we don't do in academia is we put them in a finance class and we teach them about things that are so irrelevant that they get out of there and they're not interested in finance. Yeah. And that's why Tasty kind of changed the game because, Tom, I had a undergraduate degree at the time when Tasty in finance and economics. we got to puts in the investments class and was told by the professor, okay, puts are something we don't deal with a lot. Options are something that we don't really trade. It's not for most retail traders. And it was next, and so you may have spent a day, you may have read a chapter, and that was it, because the people in academia have never sold a put. They've never traded. They've never done an iron condor or a straddle. Yeah. So these kids going through most investment classes in a college setting have no idea of what options were. So even me, being a finance and economics major with an undergraduate degree, when tastylive and I started watching in 2012, I had to learn everything new about options and how to create wealth and be successful as a trader. So
and here you are down in, here's a bunch of guys from Chicago we're talking about the derivatives marketplace, and you stumbled on it or found us somehow. And
Tom, it's interesting. We were doing the cord cutting, right, with our cable company. And we got a Roku box at the time, plugged it in.
Got it.
And I'm looking at channels, and I see this cherry and tasty. And I see these two clowns on there, and I'm like, who the hell are these two people? I research it. I go, hey, wow, these people are, hey, they're the real stuff. You, as a creator at the time of Thinkorswim, and then I researched Tony and saw him on Wall Street Warriors, even, way back in the day.
Yeah. So
I was like, hey, these two guys must know what they're talking about.
Well, we've been around the block a few times,
yeah.
But we were having 2012. We started Tasty in 2011. And we actually started in 2010, but we didn't start broadcasting in 2011. And, it's been an incredible journey, and we've learned a ton along the way. But I always like hearing the stories of, people stumbling onto us on Roku and stumbling on, somewhere, who knows where, and thinking, who are those nuts,
Well, it changed my life. It changed the trajectory of the direction that I was taking. Where else can we create a business with no physical inventory, with no office space, that all we need is an internet connection, a laptop, or even you can be at the beach with a cell phone, and we can trade. We don't have to have employees. We don't have to have all of the things that are necessary for people to go out and create businesses. So we can create a business within the trading world, and to me, it was life-changing.
So prior to 2012, prior to finding Tasty on Roku, what was your investment experience, trading experience, however you want to put it? What had you done prior?
I put 10% of every dime that I made into the S&P 500.
Okay.
So when I say the S&P 500, because I was a federal employee with the federal courts for 27 years, I put, you're contributing to 401k.
Yeah.
I'm putting in the 10%. You're getting the 5% matching. And I basically went into for those that are out there that are federal employees will know the C fund, which was a S&P 500.
Okay.
And that was all that I did.
That's all you did. So it was just automatic 401k. Federal employee.
Federal employee.
Okay, fine. But that's all you'd ever done.
All I'd ever done. Didn't know how to sell a put.
Right.
But had no idea that it was even possible.
But let's just remind. I'm going to remind everybody. You also had master's degree, PhD. You weren't.
Well, I'm going to give you a little credit for that too, Tom. By the time that I found, didn't have the master's and the PhD.
Oh, you didn't?
Didn't have it. So I had the undergraduate degree.
Got it.
You get on and you talk about taking risks. You talk about living once. You talk about doing things. And even though we had adopted these 5 kids, I'll kind of tell you how it goes. So my boss comes to me with the federal government, and he says this. He says, Bob, I've got to tell you something. He says, time for your evaluation. Get all excellent marks. The only problem is you've maxed out in your salary, which would have been okay if he'd have just said that. But the next thing that he did really pissed me off. He said, he giggled, you've maxed out in your salary. And I go, no, I've not maxed out. I've got more to prove. I've got more to do. So I immediately enrolled in the financial planning master's program at the University of Alabama. Got my master's, I used that to jump to a much better position within the federal government. And since it was so wonderful to have my children attend my graduation at the University of Alabama, I said, let's just keep going. Show them how important it is to pursue education and to take risk and to do those things. So just kept going. So I'm going to give you and Tony credit for helping me with that. And I even sent you a copy of my dissertation, and you are acknowledged within my 75-page dissertation.
I love it. I now I remember all that. Crazy. This is a great story. It's awesome. But let's talk about your trading, because a rising star segment. So I want to talk about trading, and you can obviously earn the rising star status from just some of the things that you mentioned. But I really want to take your trading career and talk about it from your introduction to Tasty in 2012 to kind of like your personal trading journey over the course of the next, let's call it, decade. Like, what'd you start out with strategy wise? At what point did you say, hey, I get this, I can figure, it's obvious from the start there was something that clicked that you loved, but at what point did it start to work, and what kind of strategies were you using?
Well, I think most beginning traders or new traders that are watching this today will follow a similar path that I did. You find out that you can sell a put spread, and you think, oh my God, I've got a 67% probability of success. I'm going to do this every day, and I'm going to retire in a year.
Oh yeah, you just roll the numbers forward.
Right, just roll the numbers, I'll be fine. And then you go, wait a minute, let's sell the call side too and create an iron condor. Mm-hmm. So then you're an iron condor trader, and you're going to retire in 5 years. Well, that doesn't work either. So then you put your big boy pants on, and you sell that first naked put. Mm-hmm. And that's when I think the light goes off to where you realize that, hey, in 100 years from now, regardless of what your age is or my age, that unless they find out some way to freeze us and keep us going, we're going to be dead. Our days are numbered on this planet. So we have to take risks. And I think when it finally clicked to me, Bobby, go naked. Take the risk. Put the odds in your favor. So I did that. And I think with most traders, we chase everything. So the next trade comes out, and we'll start trading the jade lizard and the big fat tails and the ratio spreads and so many things. And it all gets down to, here's what I did, Tom. I took every market measure that you did from the beginning until I still do it. And I said, okay, which one am I going to pull out and use? So I would, and on the computer, I'd say market measure from 2017, this date, and I put a link to it. And this is what I learned from it. And I used your market measure research to create an overall strategy. That's what I did. So I took Tasty Research, and it is still evolving.
Oh yeah,
it's still it's kind of like the Constitution of the United States. It's not it should be a living, breathing, changing document. And my trading plan is that. So while I lost $24,000 in one day in a $50,000 account, I think we've all done that.
Oh yeah.
While we've all blown up an account, I finally got to a point where I was able to put the odds in my favor and take all the research and to develop a plan that really is quite simple.
Okay. Talk to me about it.
All right. I'll talk to you about it. So here's what I do. There's the trees in the forest, and then there's the overall forest. So the first thing, when I open up the platform and I look at my portfolio,
okay, I'm
looking at three things, and this is how I manage it. And it's kind of like, I say, it's kind of like flying a jet plane, right? I've never been a pilot, but they've got all of the instruments that are in front of them. So I look at delta, look at delta, and I say, what does my delta need to be? Well, since I'm selling naked puts along with, and I'll get into the specifics of what I'm doing, but since I'm doing that, most of the time my deltas are going to be positive, which I have no problem with because there's a positive bias in the markets. But Tom, I don't want to be too positive. So quote it to me on $100,000 account. What should my delta range be? And I'll ask you, Tom, what should my delta range be on putting the spot back on you?
We use a bunch of different numbers, but in a general sense, we will argue. You mean, I'm not going to say long or short, but
long or short.
Okay, so we tend to be this is in a very normal marketplace. A little different today because we've had a pretty big sell-off.
Sure.
But I would say in a normal marketplace, we tend to be somewhere in the neighborhood of, I'm going to just give one number, short 300 deltas.
Short 300 deltas.
Yeah, that tends to be it.
Okay. So since I'm selling puts and I may not be short deltas, here's what I said. I'm going to be long no more than 0.015% of my portfolio.
Sure.
So let's say it's a $100,000 portfolio. Mm-hmm. My maximum delta so if I'm flying the plane, my maximum delta on a $100,000 account is going to be 0.0015 times the net lick.
Fine.
So it's 150.
Yep.
So I wake up every morning and I look at my control panel and I say, what are my deltas? And if my deltas are between negative 150 to positive 150, I'm fine.
Okay.
Fine with my deltas. If my deltas are too long, then I'm going to do something to get me a little short deltas. Second thing that I look at is my theta. Mm-hmm. And again, Tom, you create the think tank with the market measures that I watch, every one of them. I don't think I've ever missed a market measure. And research says that in your portfolio, you should have, as a percentage of your overall net liquidation account, of 0.1 to 0.5%.
Depends on the size of the account.
Yeah, it depends on the size of the account.
Yeah.
So, Tom, I look at my theta and I put it in a spreadsheet and it automatically calculates that. And if it's 0.1%, my spreadsheet lights up green.
Oh, 0.1% is fine.
Yeah, 0.1%. Bobby, you've done great.
Yeah.
If it lights up between 0.1 and 0.5, it's green. If it's under that, I've got work to do.
Yeah.
I got to sell more premium.
Yeah.
Okay. So I keep my deltas in check. I keep my thetas in check.
That's the same thing we do, by the way.
Same thing.
Yeah.
I used to, Tom, keep a check on my Vega. But the more that I looked at it, I said, you know what? Don't worry about the Vega.
Yeah.
As long as my deltas are not out of control, as long as my theta is in line.
And as long as you have enough time to.
Right, as long as I have enough time.
Yeah.
Because people say, I just want as much theta as I can have in an account. No. Theta is a measure of risk.
Yeah.
And the more theta, the more risk in your account. So the third thing that I do, Tom, and again, you guys had to come out with research, is I make sure that my buying power is under a certain percentage of my overall net lick. So where VIX is today in the 20s, is if VIX is between 20 and 30, you should use no more than 35% of your buying power.
Yeah, that's fair.
So if I wake up and I'm under 35, I'm great. If I'm over 35, I've got a little work to do by either letting my positions work or by taking off my existing positions.
And how has this worked overall as like for returns, just, ballpark?
Okay. So overall this year, which has been a
hard year because we moved outside the expected range to the downside.
Hard year. I mean, I wish I could get on here, Tom, and say, I'm up big. Okay.
Yeah.
But I'm not. I'm down 2%.
Okay.
Okay.
That's okay. This has been a tough year.
It's been a tough year.
Yeah.
But when I look at, Bobby, what would you have done if you had not?
Oh, you'd be down 25, 30%.
I'd be 25 or 30%.
Yeah.
So to me, even though I know you don't like having a benchmark for the account. Benchmark. I'm substantially outperforming the market.
Yeah, but now, the last couple of years have probably been pretty good.
Last couple of years have been pretty good. I'll tell you a quick story. So I had an issue with one of my toes, and I had to go to the podiatrist. I'm sitting in the podiatrist chair, and it was during the COVID crash of March, and the market was tanking.
March 2020.
Yeah, March 2020, I got an issue with my toe. Got to see my podiatrist. I've got diabetes, which I've been working out. I'm doing great, and I've lost a ton of weight, so I'm getting everything good.
Good.
But at the time, I had a really hard health issue. And in the doctor's office, Tom, there is a sign that says no cell phone. So I'm looking at my podiatrist, and I said, Doc, and he's just told me, Bobby, I got to cut your toe off. You got to go into surgery. We're taking you to the hospital today. You got to go to surgery, and we got to get this thing off. We don't want things to spread and you having to lose legs and things of that nature. So, Tom, I'm scared to death about that. And I said, Doc, the market is crashing. Would you mind, you're looking at my toe, do you mind if I use my phone to close some trades? I said, the market's crashing. He said, absolutely. And he's got this look on his face like, oh, my God, man, there's no telling how much money that you've lost. And I said, Doc, not so. Because, and this is an interesting story. In January, when COVID, we first told COVID, I closed all of my short put positions, and I put on a ton of put back ratios. And I sold 3, and I bought 5.
Okay.
And I put a ton of those on in the E-minis, Tom. So when all hell broke loose in March, I opened the platform and my hands are shaking, right? Because I don't know what to do. And I closed those positions. And it was hard because I was like, how do you close a 3 by 5? And
especially in the S&Ps.
Yeah. So I would close a short and then I close a long. Then I close a short and I close a long. And I'm just like, I got to get out of this stuff.
But it probably worked out great.
So by the time I got out, not just on the trades I had on the entire portfolio, Tom, this is great. In 2020, as I'm sitting there about to get my toe cut off, my overall portfolio, not the trades, overall portfolio was up 208%.
That's amazing.
Since that time, what I'm basically doing, and I know when I watch a Rising Star segment, I always want to know, what are people doing? What are they doing to get success? So what I'm doing now is I am selling a put either in the E-minis or the micros or
whatever.
I focus on the S&P 500.
Yeah.
So I'm selling a put that in the micros or the E-minis that I could sell for around $20. Then I'm going in the same expiration, which is 60 days or lower, 45 to 60 days. I'm selling a put that I can get for about $20. And then I'm buying a put debit spread that I can get and pay for $10. So that the overall trade is put on for a credit of $10.
Got it.
So I'm still selling my naked put, but I've got this great little put debit spread that kind of softens the blow to the downside. Money? It is out of the money. So, and I'm moving it like in the micros or the E-minis, I'm doing the put debit spread 50 points wide, and I'm buying it for $10. And then I'm selling a naked put farther down to finance the purchase of the put debit spread for $20.
Got it.
Now, the cool thing about the trade, Tom, is you can manage it as a single trade, or you can take the whole trade off as a winner. And I'm taking the whole trade off as a winner. And right now, because I track everything on a spreadsheet, right now those are closing at about 65% profit. So you don't have quite the amount of profit that you'd have if you were just short a put.
Of course.
But still you're getting 65%. So what I also did is I said, sir, here's Tom and the market measure guys, says that on average, if we're selling naked puts or we're selling strangles, we're going to keep 25% of the profit. Mm-hmm. So my spreadsheet now will tell me, hey, Bobby, instead of 25%, you've bumped that up to 65%. So the spreadsheet also then tells me, well, if you want to make 25% this year, put in 25% into the old spreadsheet. And the spreadsheet will tell you, okay, Bobby, you need to sell $100 worth of premium today. You need to sell $500 worth of premium this week. You need to sell 4 times 5, $2,000 a month, and then $24,000 a year. And based on your premium capture of 65%, you will return or should return the 25%.
You know, you couldn't tell this story to anybody but me because the rest of the world will look at you like you're freaking crazy.
You're freaking crazy, right?
Yeah.
So, but
hopefully some of the kids in your classes can pick this up.
Yeah, because the first thing that we do in the Alabama class is the first thing we do is sell a put. You know, and
nobody teaches that.
Nobody teaches that. They don't know. You know, and so that's great. So now, Tom, I've taken all the market measure research that you guys have poured into hours upon hour, and you sit there and go, God, does anybody use this stuff?
No, we know people.
People use it. So I've taken the best of your research.
Yeah.
And I developed what I think is a pretty comprehensive plan with a win rate of 98% on these, what we call a 111 or a 112. Sometimes I'll, instead of selling the one for $20, I'll go even further out of the money and sell two for $10 to finance the purchase.
Yeah, doesn't matter what ratio. Yeah.
So, and so you've got a naked put with a nice little bit of a buffer to the downside.
It's a beautiful story. It's a beautiful thing. I think we're over our time here. I'm just looking at the clock, but Bobby, that was great. I love the story. Different angle, a little different approach. You're a different kind of rising star, but I love the fact that you're spreading the word and you're getting out to all your students and talking it up, and it's just really something special. So thanks so much for stopping by the studios in Chicago. I know it's a long way from home, but you're here, Bad Trader Tour, excited about that too. And
I'm getting to go to the Cubs game with you tomorrow, Tom. So I understand
you were a winner.
Yes, I was a winner. So I understand that my job is to carry your stuff to Wrigley Field.
Have you been to Wrigley before?
I've never been, so I'm so looking forward to it.
Oh, you are going to love it.
I cannot wait.
Yeah. Thank you so much.
Thanks, Tom.